Although its progress closing above 30,000 has been rather stop-start, it isn't out of the realms of possibility that the Dow Jones could strike 31,000 before the year is out. Initially, it looked like the Dow might be helped to that landmark by the passing of a stimulus package by Congress. However, it looked like it got everything it was going to get from the $908 billion package in the run-up to its confirmation, as the announcement Congress has actually finally reached a bipartisan agreement did little for the index. That's in part because Europe soured the mood of trading on Monday. With Boris Johnson essentially cancelling Christmas in the UK, blaming a new strain of COVID-19 that the government has known about since September, the market's got a late in the year reminder that the pandemic is still an ongoing nightmare, and will be for some time yet, despite the rolling out of vaccines around the world, including the recently approved Moderna preparation in the US. And again, though Europe tends to be led by American matters, not necessarily the other way around, the lack of a Brexit deal, 4.5 years since the referendum with only 10 days left to get one over the line, nevertheless weighed on investors, both on the continent and stateside. In regards to data, the US is the only reason with something approaching a full calendar, even if it is squeezed in across Tuesday and Wednesday. The final fourth quarter GDP reading, easily the week's most notable number, arrives on Tuesday and should be confirmed at 33.1% of the annualized rate, compared to essentially the negative version of that number during the crunch of Q3. Wednesday is then a busy one, the country packing everything in before the Christmas break. Durable goods orders are expected to fall from 1.3% to 0.6%, with personal spending down from 0.5% to minus 0.2%, and consumer sentiment slipping from 81.4 to 81.0. The weekly jobless claims, a fixture of the pandemic, if not quite as headline-grubbing in recent weeks as it once was back in March and April, is set to come in at 862,000, down from 865,000. That's not a great number for it to be hovering at, and see the gradual easing of that figure week on week really seems to have stalled out in the last couple of months. Given the US is relatively divorced from Europe, it isn't out of the realms of possibility that the index can decouple itself from the Brexit and COVID-19 gloom on the continent and still find it in itself to rally towards 31,000. After all, it does have the benefit of the stimulus news, even if it hasn't necessarily immediately reacted positively to the announcement. There is still time for it yet when it gets to the US Open and then the rest of the trading sessions of this week. But it could continue to rally off the back of that news. Obviously, ideally, it would have been a bigger stimulus package, and I imagine investors are hoping that there will be another stimulus package pretty quickly once the Biden administration takes over. But that will really be dependent on whether or not the Democrats win the runoff Senate races in Georgia set to take place in January. Those are arguably the next sort of big ticket events for the Dow Jones, given that we've now had the vaccine approvals and have had now this sort of initial stimulus package. Between now and, say, the other side of Biden being sworn in, I guess the Senate races in January are the next real big thing, beyond just sort of the daily COVID headlines, which, again, aren't good. You know, we've spoken about how bad they are out of the UK at the moment and the talk of the new strain. In the US, the headlines are truly atrocious. So if there's any lull and those come to the fore once again, then that will be another obstacle in the Dow Jones's route towards 31,000.